In today's video, I want to teach you a very accurate trading strategy that is highly profitable. Just make sure you watch this video until the end so you won't miss any important point. Alright, this trading strategy is suitable for time frames like 15 minutes and lower. We continue on 15 minutes. This is the price chart of US dollar to Japanese yen, but no limitation on this, and you can use this trading strategy on any other asset or market, whether it's Forex, crypto, or stocks. The only requirement in terms of the asset or market is trading volume and liquidity, because we don't want to experience any unreal price gap or large spread between bid and ask prices that can damage our trade entry, stop loss, and profit. In this trading strategy, we have three indicators. For adding them, here we click on indicators and we simply search their name. The first one that we want to add is Andean Oscillator, this one, which is an editor's picks indicator and written by Alex Grover. And in this trading strategy, we're going to use it with its default settings. The next indicator that we should add is called Average Force, this one, which is an editor's picks indicator and written by someone named Racer8. And for this indicator, we need to change its settings. Here for the period we set it at 20, and for smooth we set it at 9. And the last indicator that we want to add is MACD, this one, moving average convergence divergence, and for MACD we also need to change its settings. Here for the fast length we set it at 100, for the slow length we set it at 200, and for signal smoothing we set it at 50. And then here in the style tab we remove MACD line and signal line because we don't need them in this trading strategy. Alright, everything is already set on the chart, and let's see how we trade based on this trading strategy. This is a trend following strategy, and we try to find the favorable momentum changes that are happening in the direction of the overall trend. It's a very easy trading strategy, and you just need to be focused on the signals that these indicators are generating. Our MACD shows the overall direction of the market. When it's red, it shows that the overall direction is down, and when it's green, it shows the overall direction is up. When MACD histogram is red, which indicates downtrend in the market, then in this indicator, which is showing us momentum changes in shorter view in compared to our MACD, in this indicator we wait for the times that it becomes yellow. When it's yellow, it shows upside momentum and possible pullback in the market, and when it becomes purple, which shows downside momentum, it tells us that probably the pullback ended and there is an opportunity to enter in the market. When we got the first purple bar, at the same time in MACD histogram, the bar should be dark red, which shows increasing downside momentum. If it's in light red, our short position signal is rejected because this shows decreasing downside momentum. And finally, our short position signal is confirmed only when in Andean Oscillator, red line is above the green line, which is not the case here. So we don't enter any short position here at this point. Again here, while the MACD histogram is red, this indicator became yellow and then it became purple. And at the same time, the MACD histogram is dark red, showing increasing downside momentum. And in Andean Oscillator, red line is above the green line. So this trading signal is confirmed and we can enter a short position here as this new candle is opened. The stop loss for this trade is placed above the previous swing high, and as you can see, this is a successful trade. After this trade, while the MACD histogram is still red, here this indicator became yellow and then again purple, but MACD histogram is in light red and the signal is rejected correctly, and you can see that the price advanced after that. Alright, moving back on the chart to show you some more examples. Here in this part, you can see that the MACD histogram is green, which telling us that the market is in an uptrend. In this situation, we wait for the times that this indicator becomes purple and then yellow. When it becomes purple, it shows possible pullback, and when it becomes yellow, it shows that the pullback probably ended. When we got the first yellow bar, the MACD histogram should be dark green, which shows increasing upside momentum, and at the same time in Andean Oscillator, green line should be above the red line. So our long position signal here is confirmed and we can enter a long position position here as this new candle is opened. The stop loss for this trade is placed below the previous swing low, and as you can see, this trade is also a profitable trade. After this trade, here again this indicator became purple and then yellow, but MACD histogram doesn't confirm because it's in light green color, showing decreasing downside momentum. And you can see that after this, the market went flat, and after that the price declined. So as you can see here, also this strategy correctly guided us not to enter in a wrong trade. Moving back on the chart here in this part, as you can see, MACD histogram is red, showing that the market is in a downtrend. So in this indicator, we wait for the times that it becomes yellow and then again it becomes purple. And you can see that here MACD histogram is dark red. And when we check Andy on oscillator, we can see that red line is above the green line. So this signal is confirmed and we can enter a short position here as this new candle is opened. And as you can see, it was a profitable signal. While the MACD histogram is red, in this indicator we can see that it became yellow and then again purple here, but MACD histogram is light red, so the signal is rejected and we don't enter any short position here. Again here at this point it became yellow and again purple, but MACD histogram doesn't confirm because it's light red, so we don't enter any short position also here. And after this changing to yellow and before becoming purple, as you can see, the MACD histogram has already changed to green. This trading strategy is very powerful in filtering false signals that are happening during range markets. For example, our MACD may show us a direction, and in this indicator, before we get a pullback and end of the pullback, our MACD already changes color, so rejecting the signal. Or in other times when the market is flat and we have a pullback and end of the pullback in the direction of the MACD histogram, and MACD histogram also confirms by being dark red, but Andy on oscillator doesn't confirm. Please pay attention that although this trading strategy is highly accurate, but it doesn't mean it's always correct and doesn't generate false signals. Losing trades are always part of the game, no matter how accurate the strategy is or how experienced is the trader. So to protect your trading account, you need to manage your risk properly. There is a risk management strategy that is called 1% rule, and it's a perfect choice for short-term trading. I have a complete guide on this. The link is also placed in the description of this video, and I highly recommend you to watch it because risk management is one of the most important factors to become a successful trader. Alright, that's it. Thank you for watching this video. If you have any questions, feel free to ask and leave a comment for me. I'll answer your questions as soon as possible. If you haven't subscribed to my channel, please subscribe and hit the bell so you get the notifications of my new videos. See you guys in next video and good luck with your trading.